The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Stocks fall, the dollar rises, yields show some renewed life here, the prelude to Jackson Hole and Jay Powell. From Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostic.
And I'm Alex Steele. It's really about tech and the semis leading the way lower today.
Yeah, absolutely, leading the charge down.
Yeah, and I don't know what the narrative is there, to be perfectly honest. Let's just say we're going to take a little bit of risk off the table as we head into Jackson Hole. You got the S&P down around the lows of the session, down by 0.8%. It's been a slow, steady slide to the downside. There we go. I got it. But led by tech and led by the semis. And on the same side, you have some selling happening in the bond market. Where you're going to buy the dollar and maybe some commodities like oil. But that's kind of it. Maybe we're just holding back and waiting with what tomorrow brings, Romaine.
Yeah, and you're taking a look at stocks right now around those session lows. But Treasury is actually making a pretty definitive move here as traders really start to reposition around this idea that Powell's speech tomorrow won't necessarily be that aggressive rate cutting blueprint that the markets have been craving. Now, that's a sentiment that was really punctuated over the last few hours when we had some interviews with 3 regional Fed presidents who each seemed hesitant to move too soon or too fast. Mohamed El-Erian says that is a sentiment that would be wise to be heeded, particularly given that the economic data is out of sync with swaps traders who have really cemented bets right now that the FOMC will indeed ease policy by a full percentage point by year end. Investors, El-Erian says, are overplaying their hands.
I think the market is overdoing it. I don't think we're going to get 200 basis points of cuts in 12 months. I don't think we're going to get 100 basis points of cuts this year. I think we're going to get 75 and 150 in total. But the market's going to have to adjust at some point.
And if you need a reminder of exactly why the Fed might show some caution in lowering rates, remember, not only have we not reached the Fed's 2% inflation target, but there's still that gray swan inflation trigger popping up from time to time. A case in point is the lockout overnight of 9,000 employees at Canada's 2 biggest railways after labor union talks failed. Immediately after that, arteries of the North American supply chains were immediately blocked. Arteries that carry, Alex, about $740 million worth of trade every single day.
Yeah, that's no joke. And how long it's going to go on until it really truly affects inflation. All right, so here is a chart that I'm looking at with the question being, do you need to hedge Jackson Hole? It's a 5-day JIP of the VIX, which is the blue line, and the white line is those 1-day zero options. Now, you can see here there's been a little bit of a discrepancy. The VIX is kind of trending its way higher just a touch. But now, just in the last 24 hours, we've seen a solid move in those 0-day option VIX. And the question then becomes, are we starting to price in some kind of action now tomorrow? And what will that action be? Citigroup was saying that you're taking a look at about a 0.9% on the up or the downside tomorrow. And on the 7 of the past 20 years, there were moves larger than 1%. So something could, in theory, happen tomorrow, Romaine.
All right, well, let's get some insights as to how the market might react to that. Julian Emanuel joining us right now to kick us off to the close on this Thursday afternoon, Chief Equity and Quant Strategist over at Evercore ISI. All right, Julian, all right, let's the games begin here. Everyone really wants to get something definitive out of Jay Powell tomorrow, another sort of mic drop moment. Not sure we're going to get that. But this is still a prelude to a September meeting that pretty much everyone universally believes is going to have at least some type of rate cut.
There will be a rate cut in September. We think it's 25. When you look at slightly less than 4 cuts priced in to the end of the year, that is less definitively this is what's going to happen than probability modeling. Again, remember, it's only 2 weeks ago we thought we were having a growth scare heart attack and the VIX was at 65. Yeah. The data's been good since then, but there is this residual fear in the market that you could always roll over. And obviously yesterday's payroll revisions reminded us of that. And so that's sort of a risk-adjusted number, but we do think you're going to get 25.
Well, what do you make of the idea that when you hear like Susan Collins and Patrick Harker and I think even Jeffrey Schmidt kind of throwing water on this idea that the Fed should even cut it all, at least if you believe Schmidt's words. But with Harker and Collins, they kind of said, yeah, we're willing to cut, but I mean, we're not giving you 100 basis points this year.
No, and our base case is 75, like Mohammed's. But let's go back and remember in January when there was 6 cuts priced in over the course of the year, and we went down to 1 cut priced in at mid-year. Expectations have been swinging, And at the end of the day, there's been a lot of noise around that. But ultimately, the story of this year has been actually earnings. And that's been the support for the stock market.
The market's still expecting 96 basis points to the end of the year. So does tomorrow become a market event?
I don't think so. Again, for us, it's this risk function.
Yeah.
And I think that, there's a lot of this memory, particularly given the action today, which, if you look at it, is really a correction of literally a straight line higher in the last 2 weeks. So not surprising by that perspective. But going back to 2022, when you had that, bam sort of moment at Jackson Hole, and everyone really would rather think that they can have next week as a vacation week. But to us,
that point, is NVIDIA going to be a market event or an NVIDIA event next week?
It likely will.
I'm off that Wednesday, but is anyone else going to be off?
Alex, come on. It likely will. And frankly, part of our view that one of the smartest things you can do is own technology convexity in your portfolio, is that when you look at a stock like that, it has traded between 90 and 140 over the last 3 months, a mind-bogglingly gigantic range. And if anyone tells you they know exactly how that stock is going to react to what will undoubtedly be a good earnings report, they got a bridge in Brooklyn to sell you as well.
Yeah, which I think has been sold a few times over. I don't think anyone actually got paid. I am curious, though, it's funny you use the word convexity, though. Does that apply to other names outside of NVIDIA, or really just to the broader market? When you look at the potential for additional volatility and really the uncertainty that I think a lot of people think we're heading into, given this rate easing cycle, given an election, given geopolitics, where does convexity play in the broader portfolio?
Well, we think it can apply in other parts of the market, but when you think about what this year has been, it really is a technology-driven bull market. And from our point of view, the AI revolution does have further to go, but yet you had this massive air pocket that obviously is not just the semi-names, but other names. And in these kinds of technology-driven bull markets, you want to sort of protect the things that are going to move the most.
Is there anything, though, I mean, specifically with regards to that technology trade, is there anything in that trade right now that gives you pause at all?
It's really just the degree of movement. I have to tell you, I go back to, call it July the 4th, the amount of buying high and selling low that we have seen in the markets, which is really, kind of alarming behavior in general, is about as concentrated as anything that we've ever seen. And that just tells you that investors are a bit fearful, they're uncertain, and I think what's going to happen as we go through the fall, and obviously the election is a big part of that uncertainty, and there's no coincidence that the politics, the uncertainty of the politics, if we had a political VIX going back to July, it would probably be 200.
Yeah, I don't even know what would go into that. That would be kind of crazy. So if that large cap tech is still defensive, basically, at the end of the day, if what I'm hearing is relatively correct, what else is defensive?
So we really think that the more traditional defensive areas, consumer staples and healthcare, actually the Fed cut playbook, those sectors work virtually all of the time. And if you think about it, it makes sense because they're less convex to an economic slowdown. And it's even more interesting this time because both of those areas have sort of been penalized a bit over the last year because of the GLP-1 phenomenon. And we think there's lots of value to be had there.
All right, Julian, I'm going to have to leave it there. Always great conversation. Julian Emanuel helping us kick you off to the close, Chief Equity and Quant Strategist at Evercore ISI. A lot of important topics to cover today, including that lockout of Canadian railway workers that are having huge ripple effects from Canada to the U.S. all the way down to Mexico. A conversation up ahead about the shakeout.
And while the countdown is on for the Federal Reserve Fed Chair Jerome Powell Jackson Hole speech, other Fed Reserve members are already making their mark with their own remarks. What to expect from Powell and the latest commentary from the Cowboy State.
And a look at some of the biggest movers on the day. Peloton having its best day as a public company. We're going to talk about how the fitness company says, well, what it's actually going to do to help turn around things. All that and more coming up in a bit. This is The Close on Bloomberg.
day. Bloomberg is live at the Jackson Hole Economic Symposium, bringing you news and interviews with Fed leaders and other economic experts. Tune in for continuing coverage leading up to a special episode of Surveillance August 23rd at 9 a.m.
Yesterday, we reported on a story involving B. Riley and Oaktree. During that conversation, we misstated the size of B. Riley Financial Inc.'s debt. The correct amount is more than $2 billion as of March 31st, according to a filing with the U.S. Securities and Exchange Commission. We regret and apologize for the error.
We are also watching the North America's supply chain, with two of Canada's biggest railways now shutting down after talks with union leaders failed. And the closures will affect supply chains across the continent that carry about $740 million per day in trade. Bloomberg's Thomas Steele joins us from Vancouver. Hey, Thomas, how long is this going to last? Do we have any idea?
Yeah, that's the question everyone's asking. Lots of people are pointing to a strike in Vancouver, where I am, in the docks last year. That rolled on for 13 days. The government is not keen to intervene in these things, and it's also got a deal with another political party here, which is particularly pro-Labour, and has warned the government not to intervene, especially on behalf of employers. So there's pressure on it politically. On the other side, as you say, it's a massive economic hit if this endures. So they're going to have to balance those up. It's also legally complicated to sort of force arbitration on something like this.
Thomas, do we know how long it takes something like this to feed its way into the stuff that I'm going to buy at the store?
Yeah, that's also a great question. There's some impact which will be felt quite quickly. There are just-in-time supply chains for things like well, it might not feed into prices, but it'll feed into the kinds of groceries that are available probably in Canada and maybe in the US. I think there are fears about wider inflation when it comes, looking at things like oil, agricultural products, fertilizer. The agricultural bodies here are warning that Canada is, it's the source of massive amounts of fertilizer, canola oil. It's in the name, canola, and that's going to immediately have an impact, because these goods are so big you can't transport them by any other means. They're not possible to shift onto trucks.
Can you give us a sense here of what we're dealing with, Thomas, in terms of the configurations here? I know obviously we're talking about rail lines that are ostensibly basically just Canadian, but from the U.S. perspective, there's obviously a big link to getting those goods across the border. Are there alternatives out there that could be used in the short term, or is this just a matter of we have to wait until this is resolved?
There are some alternatives. So, for instance, Vancouver, where I am, is the biggest port in Canada. It's not that far from Seattle-Tacoma Port. There's also the California ports, Los Angeles, Long Beach, and they are seeing increased interest. In fact, some shippers started diverting towards them earlier in the year when this strike started to rear its head. That said, they have limited capacity as well. Some things can be transferred onto trucks, but other things like lumber or metals, it's just too big. It's not the right shape. It's just not possible. And auto parts are a really integrated supply chain across Canada, US, and Mexico. And so, for instance, the Michigan-Ontario border, sees millions of parts change hands, and that could be a real snarl.
I am curious, what exactly do the union members want? I mean, are the goals and, more importantly, the ask that they have, is it something that's achievable? Is it something that you can find common ground on?
They are having, enormous difficulty, and it's been going on for many, many months. One of the negotiations with one of the railways has been going on for 9 months. Another one has been going on for about a year. And their contract expired back in December. So this is why some shippers kind of saw this coming. But it's about the amount of hours that they work in any one block and sort of safeguards around exhaustion. On the other hand, the railways are saying they're already paid, well. And, even as of last night, we stayed up late to see whether they would meet each other in the middle before the deadline. They were saying they were far apart. So it's not optimistic, that the noises that are coming from both camps.
All right, Thomas, we're going to have to leave it there. Appreciate you taking time for us. Bloomberg reporter Thomas Seal there reporting here on the lockout of about 9,000 employees at Canada's two biggest railways, potential ripple effects for all of North America. And of course, the first thing I saw, when you see the story, the first thing you think back is all the disruptions during COVID. And we know how hard it was just to get basic items, whether it was furniture or even just something as simple as, a small little, household item.
Absolutely.
Yeah.
Now, I guess the good news is that core goods prices have already been falling. There's already been in a disinflationary environment. They actually fell on an annual basis the most since 2004. If you look at that core goods price, so there is some, I guess, wiggle room there. Like, it's not like it's happening in the services industry, but I'm interested to see just how long it lasts equals the actual inflationary impact.
Yeah, and it comes at a weird time too, because we talk a lot about back to school shopping, and of course the holiday shopping season, where a lot of those overseas goods now in September start to make their way here. Whether this could have an impact on that as well.
Right, and also how are retailers managing their inventory? Right, I mean the just-in-time versus actually stocking. Like if you're already pretty lean,
and and you feel like they just finally figured it all out, and now all of a sudden they have to adjust again. All right, we're going to keep an eye on that story, and of course Bloomberg will continue on this as long as it goes on. But we do want to turn back, go to some of the big movers on the day, including shares of housewares retailer Williams-Sonoma. It's part of our top calls, and it's up next. This is Bloomberg. All right, let's get a view from the sell side. Top calls, big movers on the back of analyst recommendations, and we're going to start off today with Crocs stepping up to buy over at Williams Trading. The analysts there excited about actress and producer Sydney Sweeney signing on as the global ambassador for Crocs' Hey Dude brand. Poser, the analyst over there, expecting the deal to get the brand back in the spotlight of young consumers. The shares higher by about 1% on the day. Next up, Urban Outfitters. Telsey Advisory Group dressing them down to market perform. Dana Telsey citing limited visibility for further gains in the stock. She sees sluggish sales continuing, making way for increased earnings risk in the near term. And finally, let's take a look at Estee Lauder. Piper Sandler upgrading the stock to overweight. The firm saying they're confident in the stock's valuation and the company's future prospects. That includes the recent management change. They're also encouraged by insights that we got out of Coty's earnings on the improving state of the prestige beauty market. You're taking a look at shares there of Estee Lauder up about 0.7%, and those are some of our top calls. We do want to stay in the sell side space and take a closer look here at the home goods space. Retailer Williams-Sonoma sliding today after missing quarterly revenue estimates and trimming its revenue guidance for the year. The chief executive over there, Laura Alver, citing an uncertain economy and a slow housing market for the downtrend. Let's bring in Stephen Zaccone, director of Hardline's retail equity research over at Citi. He's got a neutral on Williams-Sonoma shares. What breathes life back into this, Stephen? Is this simply waiting for a better economy or a better housing market, or is this something more specific to the company?
Yeah, thanks, Romaine, for having me on again. I think the company has executed very well, right? They've implemented more newness. Their brands are in a great spot. But yes, it is really coming down to the macro improving, right? It feels very similar to what you're seeing in the home improvement landscape, where you really need housing turnover to pick up to see that stimulation of demand. Furniture is very similar, right? Like you need people to move. You need people to kind of sell their home, maybe upgrade some furniture. So we really need rates to come down and that catalyst of housing turnover to start to happen.
I am curious, and I know you're not in the business of giving the company advice, but let's say these conditions persist for a significant amount of time. Are there any levers they can pull to sort of get over this hump? The idea, instead of just waiting for whatever that churn in housing and other things that they have relied on in the past, what else can they do to get people in the stores?
Yeah, I mean, Williams-Sonoma's taken an interesting approach, right? They've actually prioritized margin rate in the near term. I think their focus has been trying to drive higher margin rate and not necessarily promote to drive traffic, which has proven very good for the bottom line. If you look at the stock, it is down today, but it's had a really strong performance year to date. Arguably, the bar was kind of high going into the print. We've seen some of these other housing exposed names, when they've cut guidance, they've actually gone up. But if you look at that year-to-date chart, Sonoma has actually done very well. So I'd say they've really prioritized the margin rate. They've been willing to lose a good amount of sales to protect the bottom line, and it's worked out, thus far.
Well, Stephen, though, how much of it is due to just Williams-Sonoma specifically, because I look at, say, TJX yesterday, and their home goods category actually grew. So I appreciate the margin story for Williams-Sonoma, but is it just also really expensive to shop there? So they just need to rather go to TJX home goods instead.
Yeah, I mean, it's partially the reason we have a neutral in the stock, right? Because I think when you look at the landscape and furnishings, we could be promotional for some time, because the consumer is focused on value, right? Like you need that catalyst to kind of come and shop, since you don't have as much housing turnover. And, and the category's gotten more difficult. 2-3 years ago, you could push price. Now you really can't push price. So it's going to be more challenging. Now, Sonoma still has very strong brands. I think they're going to prioritize margin rate as the strategy for shareholders. And, I think the argument that Laura Albert made today on the call is the margin profile for Sonoma is a coiled spring. As you start to see the macro improve, you should see sales lift, and then you should start to see, bigger earnings revisions to the upside. Yeah. So I think they're kind of patiently waiting.
I mean, it's a solid pitch. I usually tend to wait for the sales right after Christmas, but that's just my jam. To that point, though, what's the trigger for lower home? So the second you get lower rates, right, for mortgages or the 10-year, like what's the trigger event for that for a company like Williams-Sonoma?
I mean, you need to start to see existing home sales turnover. You need to start to see people moving. That tends to be the lag. Like you move into a new home, maybe you do a repair or remodel a project, and then you're going to purchase the furniture after, right? So I think you really need to start to see turnover. Rates coming down does help general big ticket purchasing if anything's financed. So I think if we start to see some rate cuts come down, mortgage rates are already below 6.5%. There's some headlines today, like it would be great to see it kind of have a 5 handle. So I think rates coming down also kind of helps the category. The last thing, just when you think about consumer confidence, right, we're going into, the election here. It's been a distraction. I think that's hurt confidence overall. I think once we kind of get past the outcome of the election, there probably will be some sorts of relief for the consumer of just like, okay, this is what we're going to move forward with for the next 4 years. So I do think that distraction probably needs to get out of the way too.
All right, Stephen, thanks a lot. Appreciate it. Stephen Zaccone of Citi joining us there. I guess, Romain, my question is, like, how much is that deferred? How long is that deferred spending there for? Like, I get the housing market has to recover. What are we talking about, 18 months? What?
Yeah, I mean, it's kind of a weird dichotomy, right? Because it's sort of like, at some point, this is just deferred. Just a similar way at the opposite effect, where everybody did all this stuff at once. And then, of course, that meant they didn't need to do it then. But at some point, you do it. But I understand his thing about churn. Like, when you're swapping houses, at a more frequent basis here, people are going to want to refresh things, right? But if you're just in your same little hovel here in this beautiful, smelly city of ours, then maybe you just don't have.
Aw, New York's the best.
Maybe I need a candle.
I don't know.
They sell candles, don't
I need a new rug, but they do. It's just so expensive. I need a cheap rug that my daughter can spill anything on. All right, coming up, will they, won't they? These are all the questions. Fed officials leaving the door open for an interest rate cut in September. Just how big? We'll go right to Jackson Hole. This is Bloomberg.
This mandate on the I think we seem to be getting some really good movement that direction. But before we act, at least before I act or recommend acting, I think we need to see a little bit more.
All right, and that's new Kansas City Fed President Jeffrey Schmidt discussing his thought process ahead of a big FOMC meeting in mid-September. Of course, out there at Jackson Hole, Wyoming. Meanwhile, Alex Steele, Romain Bostic here, 3:30 p.m. in New York. Still following, I guess, what Jay Powell may say tomorrow. And I guess I thought Schmidt's comments were interesting because he basically said he's not really all that in favor of a rate cut, which kind of differs with some of the other Fed members who say they do want a rate cut, maybe not as much as the market wants, but at least they're open to the idea.
But yet we're still looking at 96 basis points priced in when it comes to work. So clearly Fed officials do seem united, and there's no emergency 50 basis point rate cut on the horizon, right, from what they've said.
Well, that's what I wonder too. I mean, everyone keeps saying, oh, there's no reason for Jay Powell to say much tomorrow, but I kind of feel like the market kind of needs something, right? I mean, like if he needs to talk him off the ledge of this ridiculous 50 basis points or whatever, or ratify it and move on. But otherwise, we're just going to be twisting in the wind until September 18th, 19th.
It's going to be the continued balance of the jobs versus inflation mandate. What was interesting, I think, with Schmidt is that it felt like he was saying more on the inflation front than the jobs front. Just in that particular segment, that it's more like we're still worried about prices in a different way than, say, just the job market.
Yeah.
Anyway, let's get the view from the ground. Jackson Hole Symposium isn't just a matter of will they or won't they. The Fed could also provide that guidance on the future of their mandate and policies more broadly. And we're joined by Nela Richardson. She's the chief economist and ESG officer at ADP, the automatic data processing company. And it's right here. That's not a backdrop. That's not a green screen. That's real. She's from Jackson Hole right now. Hey, Nela, what do you think we're going to hear from Jay Powell tomorrow?
Hi, it's good to see you guys. You know, I agree with Romaine. The markets need something and Main Street needs something. And there are three things I think that the Fed could do and what we could hear from Chair Powell tomorrow that would totally change the narrative. First, I think it's okay to do a victory dance. It's not mission completion yet. No Fed president is going to say that, but they did get through a great quarter after some turbulence. Their patience has been rewarded with great economic data. Why not celebrate that? The second thing is they should be in it for the long haul. This is not just about September. This is about a world that has changed and is much more susceptible to bouts of inflation. That's what you'll hear from the academics that are speaking tomorrow. And then the final thing that he can say is like, what's normal? We don't know anymore. Is it rock bottom interest rates? Is it record low unemployment? Set the norm for us all so we don't freak out every time we get a little bit above what we think a record low should be.
I don't think the market's going to like that at all, Nela. They're going to be like, that tells me nothing.
It's not going to tell you anything about September. I think we all assume that there will be some action in September and there will be a cut. That's what we're all assuming going into these meetings. That's what the data is lining up. Anything can happen, but that assumption is there. But this is not about September. This is about the future of the Federal Reserve over the next few months, about their framework, about how they change the discussion from a soft landing to what happens next.
Well, give us a sense here. I mean, you're, as an economist, and you look at the same data, obviously, the Fed looks at, and I assume they don't probably get the data any quicker than you do. Is there something that we're missing here? Because I'm looking at it, and I don't necessarily see a reason why you would cut or cut significantly right now. And I feel like we had the same debate when there was all this talk about when the Fed should stop the rate hikes and that they were late to the party. And I don't know, maybe in hindsight, they really weren't.
Right. I think this is an opportunity for the Fed to go from behind the curve to out in front of it. And this is where we might get some news over the next 2 days. Because you're absolutely right. On the face of things, if GDP is going pretty much on track, if the unemployment rate is below 5%, if people are still spending, why cut? Well, there's a reason to cut if you think you're restrictive. So building that out for all of us. What is the effect of Fed policy? How is it actually hitting the economy, hitting Main Street, hitting Wall Street is an important part of this week's discussion. In fact, it's the theme of the Jackson Hole Symposium. That transmission mechanism is important. And if you want to pull some of that heat back off of the interest rates, what effect do you think you're going to have on the economy? If we can get that articulated, maybe we can understand it a little better.
I know you just arrived there, but I mean, can you kind of give us a sense of kind of what that mood is on that topic then? I mean, I know you economists aren't necessarily like the most wildest bunch out there, but you know, I mean, no offense, but you know, it is what it is. But I mean, like,
have you actually ever been here?
Well, I don't know. You could fill us in after the fact.
We're wilder than you think, Romaine.
All right. Well, what about on the policy basis? And we'll talk about the after parties later. But talk to us about the policy mood right now, because this is not the slam dunk. It's not easy to look at this data and say definitively we should do one thing or another. It's not that black and white, is it?
No, and this data dependence has become a catch-22. Because how long do you follow that data, and where does that data lead, and what data are you looking at? And I think you're right, it's early. Like literally an hour ago, I was taking pictures of buffalo on the side of the road. So we are very early into the symposium. But I think what you're going to see is a redefinition of what the mission is. We've gotten through the worst of the inflation. We're still on track with the labor market. Yes, the unemployment rate is going up, but it's not so bad when you look at layoffs, when you look at wages, when you look at other indicators. So what is success look like? I think you could define that here. And I think that's what we're going to hear both from the academics and the paper presentations. What does the effect of this Fed policy mean for the economy, and what it could mean if we are aspirational about the Fed's mission in the future?
I can confirm that Tom Keene has already been to the $1 Million Cowboy Bar, and he's been there for like 24 hours max. So, just to that point.
Well, he's a veteran. He's a pro.
Yeah. Nela, when you have, though, the delayed transmission mechanism, doesn't that count on the up and down side? Like if the Fed cuts right now, you won't feel it till later anyway?
Yeah, that's true, and that's always been the standard operating procedure in the manual. But I'm kind of convinced that that lag is a little faster than it's ever been before, that markets assume information very quickly, that the data that we're getting, both from the public sector and the private sector, is a little faster. The frequency is faster. You're seeing things in real time that we didn't see 20 years ago. So those lags, I think we should contemplate. I think that's part of the discussion. How is it still 6 to 9 months? Maybe it's 3 to 5 months. Why is that etched in stone when so much of the economy and how we measure it has changed?
All right, Nela, going to have to leave it there. Really just one of the brightest stars in economics right now. So jealous of Nela out there in Jackson Hole, Wyoming. Nela Richardson, ADP chief economist and, of course, a Bloomberg contributor. And, of course, Bloomberg will continue to have full coverage of everything that takes place out there, including Jay Powell's speech tomorrow morning. Coming up here on the big program, we're going to take a look at shares of Peloton sitting near an 18-month high, having their best day as a public company. And that's all on the back of its latest quarterly report. It's our stock of the hour. It's up next. This is The Close on Bloomberg. Peloton says it's finally seeing the fruits of its turnaround plan, and investors really like what they heard. The shares having their best day as a public company here. Abigail Doolittle joining us right now to break it all down. I was just kind of going through their sales growth trajectory over the last few years. It was like basically 10 straight quarters of either declining sales growth or no growth at all. They finally broke that streak, although I think they're saying that growth is going to be like 1% on the sales side. But investors are somehow pleased with this.
Yeah, it's unbelievable, really. I think it's a case of expectations being in the gutter. Things have been so bad so long. As you were talking about, if you go into the Bloomberg terminal, if you use the FA function and you go back and you take a look at sales growth, it's double digits down for quarter after quarter. The last time that they grew, and it was actually single digit growth, was I think the last quarter of the fourth quarter of December of 2021, essentially. And right now, the growth that we're cheering about so much, it's I think 0.6%, 0.1%. It's not even real growth. It was a 2% sales.
And we should point out the Bloomberg terminal just rounds that down, so it actually says 0%.
0% growth. So
that's how minuscule it was.
Unch growth. Yeah. But if you think about the fact, this was a $170 stock just 2 years ago. Now it's a $4 or $5 stock. So that's the degree of the fall. In May, if you recall, they lost their CEO. Layoffs. I think that there was actually real.
Lost, you mean they forced him out?
Well, I'm not sure about the CEO, but real going concern issues here. Yeah. So the fact that they're keeping it alive, they also put up a smaller loss than expected. So I think there's some expectation that maybe they're going to turn the quarter and put up a profit. Now, what's interesting is hardware was down a little bit, but the app subscriptions are up for this current quarter. Yeah. The guide's really not that great, to your point. It's less than the street, and they're talking about the subscriptions. They just don't know if they can keep it going. So
I feel like they're not adding a whole lot of new customers, but are they monetizing the existing customer base better?
Well, I think that they had added in this past past quarter. Now they're saying they can't really keep doing that.
Gotcha.
At least that's my understanding. There's also a 20% bear short interest here. So you have some bears getting it in terms of the stock reaction.
Well, sales from its app subscriptions did climb 2% while the hardware sales fell. But still, just sort of the growth rate. I'm going to go to short covering. I mean, short interest had risen over the last month or so. So I'm just wondering how much of this short covering.
I think that's probably a lot of it. The fact that these bears thought that it was just going to literally be a going concern story. And now here they are, closer to profitability, the EBITDA better. That's the important thing I should point out for this year, 2025, their fiscal year 2025 that ends the end of June of 2025, their EBITDA number 2 times what was expected. So there's a little bit of light, a little bit of hope.
Right. It also, though, depends on the whole, is it a software company or is it a hardware company?
Yeah, it's a good question. Once you buy the hardware, and that's what they're saying, that for this current quarter, they're actually using the uncertainty about keeping adding the broader economy. So they're really, it's just interesting to see this reaction given the fact that they're not wildly bullish on the future. And they also need a CEO. A permanent CEO.
Yeah, I kind of forget that they don't really have permanent leadership here. Who's your favorite Peloton instructor? You have one of these bikes, right?
Well, I've never seen one actually.
You've never seen
I've
Peloton?
never seen.
Never laid eyes on
Never
Peloton.
laid eyes on Peloton, whether in real life or an ad. I'm telling you, things that I'm not interested in, I just kind of tune out.
You've seen Peloton, right?
I have seen a Peloton.
Okay, all right. Have you used a Peloton?
I have not used one, but I have heard that those instructors, if you love them, you love them.
Well, that's what I was saying. I have friends who have these Pelotons, and they are so married to.
So you haven't used it either?
So I have used it.
Oh, you have used it?
Yeah, I didn't know what I was doing, and I don't really care about the instructors, but I know people use it, and they are rapid. But it's sticky because they are. I mean, I guess if the instructor leaves, maybe it's not sticky. But as long as their favorite instructor is there, they're going to continue paying for that.
Yeah, that personality, the addictive nature of it. The music, probably the whole package.
But you got to increase how much those people pay to really want making it work. So
good
how
point.
do you do
Maybe
that,
you could be the CEO, Alex.
No, God, no. Oh, gosh, you definitely wouldn't want me for that. But how do you wind up doing that at the end of the day? All right, Abigail, thanks very much. Really appreciate it. Bloomberg's Abigail Doolittle joining us there. Huge move, record move there for Peloton. That stock up 33% now, $4.48. The rest of the market, though, continuing on a downturn here. You're looking at the Nasdaq off. You got the S&P off as well by about 1% as we're about 15 minutes away from the close. We're going to talk to Diane Jaffee, Senior Portfolio Manager over at TCW. She's coming up next in the close. This is Bloomberg.
It really is a technology-driven bull market. The AI revolution does have further to go, but yet you had this massive air pocket that obviously is not just the semi names, but other names. And in these kinds of technology-driven bull markets, you want to sort of protect the things that are going to move the most.
Julian Emanuel there, the chief equity and quant strategist over at Evercore ISI. He kicked us off just about 50 minutes ago to the close. 10 minutes ago now, Alex Steele. And stocks look like they're hitting fresh session lows. S&P now down about 0.9%. The Nasdaq down almost 2%.
Yeah, it looks a little ugly. The Russell only down, though, by 0.7%. It's really about chips. It's the stocks that's just getting hit. And there doesn't seem to be a super fundamental reason why. It's just chip stocks getting creamed right now.
But this is the rotation. You see it there, third line of your screen, 3.5%. But this is the rotation, right? That anytime people, for whatever reason, are spooked, I don't know what they're spooked about today, but for whatever reason, that's the first thing to go. And I guess that's partly just sort of testament to how much they've gained.
I just think, also wonder, is it just taking off risk into tomorrow? Full stop. And to next week with NVIDIA. Yeah, absolutely here. Well, let's get some insights out of our next guest as we count down to those closing bells. Just a little more than 8 minutes to go. And Diane Jaffee joining us here in Studio 2, Senior Portfolio Manager over at TCW. All right, I'm going to start off with the short term, which I know you guys always hate to talk about, but that's everyone's so focused on what Jay Powell's going to say tomorrow. And as Alex alluded to, we have some NVIDIA earnings next week. Will that potentially change the market narrative, or is that just kind of wishful thinking?
I think people want him to be a little more lenient about the direction of interest rates going forward, and I think that would be positive for some of these high-flying AI stocks, and particularly for NVIDIA next week. But NVIDIA is writing its own story for the most part, really in terms of innovation and AI, as Julian was mentioning earlier. But nonetheless, from my perspective, in terms of what Alexis was saying about rotation, we do think that there's room for value to move ahead.
Where do you find that?
So we really are looking very positively at the earnings that have come from financials. I mean, they are really number 2 next to IT, and they should continue to accelerate as the year continues. And while IT earnings are going to continue to be robust, they're decelerating.
I'm curious. So on the financials front, is that primarily the larger money center banks, or is it kind of the next tier down?
So there is a big debate about, when to go into the regional banks, and we have been very fortunate not to have been there when it was really tough. I read something in The Economist a week ago that said that the regional banks are really the funders of the shadow banking system, and it has escalated to about $1 trillion. So I do worry a little bit about that, but I do think that financials in general are a really good place to be.
We were also talking with Julian about sort of a rate cutting cycle, healthcare, consumer discretionary, or consumer staples just do really well. If the Fed cuts not in a recessionary environment, though, is the playbook different?
Ooh, that's a very good point. I think that slow and steady growth, if we can achieve, what we want, which is that graceful soft landing, I think that the whole market will do well. And I do think that your point about utilities and consumer staples should, shine a little bit more, but, we are more overweighted in healthcare and financials.
Right, so sort of that highly cyclical part of the market. So do you think that tomorrow's going to be a market event? Do you think the next week with NVIDIA will be a market event?
I think Jay Powell is hoping it is not a market event.
I'm sure he is, yeah. Do you think that NVIDIA will be, though?
Yes, because everyone is looking for that and what they're going to say and whether their new products like Hopper are going to be coming on time and Blackwell. So they just want to make sure that the pattern that they have set forth is really going to continue. That will be a market event.
What does kind of like the next year or so look like? Because, most people seem to be in agreement that rates are going lower. Now, how fast they go, that's the debate here. But most people believe if you come back on this program August of 2025, rates are going to be significantly lower than where they are today. How does that change, if at all, your investment strategy going forward? Are there things that you would look at then that you wouldn't look at today, given a potential drop in rates?
Well, we always recession test all of our stocks. Just, there's always the probability of a recession for 20 to 30% in any given year. But if we do achieve this soft landing, I think the stock market continues to grow up and higher for longer, but more evenly weighted.
Do you think we're going to get that soft landing?
I feel like it's a maybe. I feel like that's a really big maybe.
I think so.
Yeah.
No, I think so. I think, with what we know today, right? Obviously, there's exogenous events that can occur, but with a recession probability of only 20 to 30%, that means the odds are pretty good for a soft landing.
Money market funds. Does that money then go into the equity market if we get that soft landing that kind of helps glide its way higher? Is that a theory?
I think if we get some political stability, some geopolitical stability on top of that, and it could be quite nice. And I think that money market funds are really, we saw a huge amount go into money market funds over the period early August. It's estimated to have $6 to $6.5 trillion there. You get juicy 5% returns, but if you can get 10% in equity, why wouldn't you do that?
Do you think the market reaction to data right now is the right market reaction? Like, you look at fundamentals, like you look at earnings, you look at top and bottom line, right? The market's looking at these big events, like the jobs data that we got in the beginning of August, like initial jobless claims, like last week. Is that reaction function appropriate?
Prices follow earnings. We are a big believer in that. But of course, macro has to weigh on top of it. So you have to take that into consideration. But at the end of the day, if earnings growth is going to be 15%, mid-teens this year and next year, then that's where prices should follow.
What's sustaining that earnings growth? Because I think a lot of people were surprised at how resilient corporate earnings were in this year and even towards the end of last year. What's sustaining that?
No recession, right? And a lot of fiscal stimulus. So a lot of investors early on were just presuming that we were going to have a real negative slowdown in growth, and their earnings assumptions fed into that. And companies were feeling the same way too, right? They were very concerned. And so the fact that, I don't think growth has been pulled forward at all. I think these companies are really, if you look at revenues, they actually increased from 3% to 5% in Q2. That's pretty good.
So overall, you're still pretty optimistic, though. All right, Diane, always a great conversation and always wonderful to have you here in person. Diane Jaffee, she's Senior Portfolio Manager over at TCW, helping us count you down to these closing bells. Just about 3 minutes to go, Alex, and stocks now hitting fresh session lows across the board.
Yeah, it's not just about NVIDIA. We also have other earnings that are coming out in just a few minutes' time. Intuit, so the parent of TurboTax, Workday, Ross Stores, also Cava. Well, Cava? It's Cava. Okay. We'll be breaking that down as well. I'm really interested in Ross Stores. They've had a lot of brands, and they have a lot of less horrible markups. If that's a way to phrase it.
Less horrible markups. That's one way of putting it.
Yeah, sure.
No, I mean, look, I guess you're trying to say, it just gets back to the whole value-conscious shopper thing and who benefits from that. And maybe Ross Stores is a beneficiary. I've been in Ross Stores once, and I was a little...
No, it's so good now.
Is it?
Yes.
I don't know. You told me TJX was good, and I got lost in there.
Great.
It was.
You have to hone your skill set. Like, it's not something that comes naturally. You're still traumatized from that
whole experience. Yeah, I need a personal shopper and some well-defined departments there. All right, we are moving closer to those closing bells. A full breakdown of all the market action today. Stick with us. This is Bloomberg.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alex Steele, taking you through the closing bell. A global simulcast. It starts right now. Scarlet Fu wheeling here into the TV studio. Carol Massar.
Hello.
Showing up once again here in the radio booth. But Tim Stenovic taking the day off. Matt Miller filling in. Welcome to our audiences across all of our Bloomberg platforms.
Did he just take off his glasses
and
like
Matt
he was a
doing
superhero?
His best Clark Kent impression there. So we'll start with you, Matt, since you just took off your glasses and you look so serious here. Step on Carol's toes and tell us what you think of the market today.
Ouch.
You know what? I was not surprised that we saw the market turn a little bit lower. We got the initial jobless claims that were bang in line, but revisions added another 1,000 people to the dole. So we're seeing these revisions. We saw yesterday another 818,000 added or taken away in terms of jobs from the year through March to the downside. So the economy is looking a little bit weaker, but not so much weaker that we're going to get 50 basis points. And I think that's what the market's a little bit disappointed about today.
Can we just rip off the Powell, Band-Aid and just get through it and let's see what he has to say? Or if he doesn't, he's probably going to do, right, Scarlett, this really great Fed dance and balance that he has become really good at.
Yeah, he's not going to say anything to disrupt the markets, and he's not going to change his tune in one speech. I liked what I read in a note earlier, which is higher for longer is going to turn to slower to lower.
Slower to lower. Oh, man, that's going to hurt my head a little bit there. But, guys, I got to say, you look at the markets. It's the chips. It's the semis that are getting hit. That has nothing to do with what Fed Chair Jay Powell is going to say tomorrow.
All right. Well, maybe we can get Tom Keene to take Powell out to the Pioneer Grill, get him liquored up here, and maybe he'll say something of significance tomorrow. Meanwhile, for today, a bit of market repositioning, erasing most of the gains that we have seen over the past few sessions here. The Dow Jones Industrial Average is going to finish the day down by about 0.4%. And we should point out that's basically your outperformer on the day amongst the major indices. The S&P 500 down 0.9%. The NASDAQ Composite down about 1.7%. And the Russell 2000 is going to close the day down by about 21 points or 1% on the day.
All right, guys, we've got Intuit crossing the Bloomberg terminal. Fourth quarter net revenue, slight beat, $3.18 billion versus an estimate of $3.09 billion. Fourth quarter adjusted EPS, folks, also better than forecast, $1.99 versus an estimate of $1.85. The outlook, the company saying it sees 2025 revenue of $18.16 billion to $18.35 billion. That is above, at least the high end, above the estimate of $17 billion. And then also sees first quarter adjusted EPS of $2.33 a share to $2.38. That is below the estimate of $2.80. And you've got shares of Intuit, guys, down about 2.3% here in the aftermarket.
All right, we'll continue to keep an eye on how that stock moves. In the meantime, let's just go back to what we saw today in the cash market, because it was kind of a steady decline in price action for the S&P and the major indexes. And when you look at the sector performances, you really have some asymmetry when it comes to the groups that declined. Tech stocks losing 2% on the day, consumer discretionary losing 1.9%.
All right, we're looking at Ross Stores, also coming across the wire with earnings. EPS in the second quarter, $1.59. That beats the estimate for $1.49. So it looks like, at least on the bottom line, Ross is doing better than expected. It's interesting, we have seen some companies come out today, Peloton, for example, that did better in terms of margins, but weren't able to move the needle at all on the top line. And that actually has helped Peloton stock. We'll see how these Ross estimates come in, because so far we've only got the EPS out. I got to comb through the release to look for the sales.
Well, it's versus yeah, you're right. Just got that number versus $1.32 a year ago, and estimate of $1.49. It looks like sales $5.29 billion, and that's up about 7.1% from the year before. Estimate is $5.25 billion, so a little bit more coming out here.
I'm taking a look at Workday here. So it's a cloud company. Taking a look at adjusted earnings coming in about $1.75. That is a beat. You're also revenue up 17% year on year, coming in at $2.09 billion. That also beat subscription revenue up 17%, professional services revenue up 12%, and the backlog looks relatively solid as well.
Yeah, interesting too. They're also announcing a partnership here with Equifax here. So as you talk about a company that really has started to expand, or at least try to expand its base of operations, and at least that's paying off. It looks like, at least based on these numbers, on the margins already, definitely a beat there on an adjusted basis, 24.9%.
Yeah, and they're also saying that they're slightly raising their expectations for 2025 non-GAAP operating margin, as Romain was saying, expanding really in North America as well. Impressive too, because customers have been shifting their IT budget to AI products versus the kind of cloud products that Workday might offer. So solid beat potentially on that end.
All right, guys, we're going to go back to some of the individual movers as we continue to track some of the earnings coming out here. Peloton Interactive, man, up 35% here, surging off the charts here. The company came out, reported earnings that beat analyst estimates. They are kind of signaling maybe that their turnaround efforts are starting to bear fruit. We talked with our Mark Gurman, and he was a little surprised at why this is so upbeat. And, we're going to have to see what happens with this company going forward. Keep in mind, it is way down from its January 2021 high.
167 was the high, right?
I know. It's down like 97% from that. So a long way from what that company was, certainly, and when it was a pandemic darling. Zoom, we talked about the earnings after the close yesterday, finishing the day just shy of a 13% gain, surging the most in more than 1.5 years. Company reported second quarter results. That was a beat, raised its full year forecast, talked about new AI and contact centers products continuing to deliver. We did also get news that the company said the CFO would resign. Nothing seems to be a disagreement with the company, and they have begun a search for the successor. And Paramount Global, the story that keeps on giving. We continue to see, we know we got some news yesterday after the close about Edgar Bronfman raising his offer. So Paramount, once again, building on the gains of yesterday of about 1.4%, up another 0.8% here, Matt.
All right, Alex, to your point, that is the chips that are down today, and certainly NVIDIA is leading us down the S&P 500. Intel had a very bad day. They had a director, Lip Bhutan, who was brought in years ago to help turn the company around. He was named to the board in 2022. He was on the M&A committee. Well, he's out of there, at least according to people familiar with the situation. Intel has declined to comment. Tom didn't respond to a request for comment. In any case, you can see those shares right now down more than 6% at the close. Advanced Auto Parts, much smaller company, much bigger loss. The shares were off almost a fifth, I think. If you look at Advanced Auto Parts, the plunge was the most since May of 2023. There you see, 18%. It slashed its annual profit forecasts by more than analysts expected. Also, you may have seen that Carlyle came in and bought its WorldPac unit. That's the OEM parts sales unit. Carlyle spent $1.5 billion for that. Snowflake shares fell as well. The software maker reported second quarter results and gave an outlook that didn't necessarily miss. In fact, the results beat on a couple of key metrics, but analysts are worried about product revenue and the gross margin forecasts. And then Urban Outfitters. I didn't even know it was still a store.
It's still a store.
It's a super hot store.
Okay,
by the way.
Still a super. All right. Anyway,
wait
Not
till
for me,
wait till your daughters get older, right, Alex?
Yeah.
Right? Yeah.
All right. So they own
Anthropologie, if that helps any.
Anthropologie. My mom loves it. Free People. She loves that store as well. Quarterly sales growth was less than Wall Street expected. 2% was what they posted on comp sales. The street was only looking for 3%, but they couldn't hit it. And as a result, the stock is down. Executives on a call today were saying they may have to add more promotions, they may have to add markdowns. So you can take your kids to Urban Outfitters. I'll take my mom to Free People, and we'll get them some stuff for cheaper.
Yeah, no, hey, I only shop on sale. So you're speaking my language right now. I'm taking a look at the bond market. You definitely had a sell-off across the curve, particularly in the front end. You got 2-year yields up by about 8 basis points. Also, guys, looking at money market funds yet again, hitting another record high. Again, you got $6.24 trillion. Does that actually belong anywhere? And does it belong to the bond market? Does it belong to the equity market? Or does it stay there?
All right, we go back to some of the earnings crossing the wire. I mean, we're just talking about Ross Stores, so those shares higher on the day by about 5% in after-hours trading. Meanwhile, Workday still remains in the red, although we are learning that the company did authorize a buyback of about $1 billion worth of shares. That did pare some of the losses here in the after-hours trade, but you can see Workday still down about 2%.
Yeah, and you've got Intuit, right? Also coming out, their board approving a new $3 billion share buyback authorization. You've got shares of Intuit in the after hours up about 2.4%. So a little bit of a different trade for those guys.
I'm sorry. Can we talk about these new Crocs stiletto shoes?
Because you love Crocs, don't you?
Are they called Hey Dudes?
Wait, stiletto shoes? Crocs stiletto?
Yes, put a picture of these shoes. Well, those aren't them. You got to Carol, explain this to the people.
Well, actually, what's really interesting is Matt Miller actually brought this to my attention.
Matt
and
likes these?
I think it's because Sydney Sweeney is in the story.
My favorite actress.
Gotcha. Okay.
She is like, what do you get?
Careful.
Golden Globe.
Just cut Matt off, please. Who knows where he's going?
Wait, they have heels like stiletto heels?
Yeah, do we not have a photo of this thing?
I'm looking for these pictures.
Apparently we don't. Anyway, there's a great story on the system. A new pair of Crocs. This is under the Hey Dude brand, but it's stiletto heels.
I haven't seen the
and you have
stilettos.
to see them to believe them. But
I've only
apparently
seen
we can't see them now.
The Hey Dude brand shoes that Sydney is repping, my girl Sydney, those are like Toms. They're like sort of hippie dude surfer shoes.
Or old man shoes.
Yes.
Or that.
Sorry.
Yes.
I
see what this
stilettos.
is. I get you. I would totally wear those.
The Crocs stilettos,
No.
right?
I would totally do it.
No, those are not a good look.
Wait.
I don't know. They're kind of fun.
Wait, now I got to pull them up. Totally would wear them.
Right?
Are we really
Totally
missing this
wear
chance
them.
to put Sydney Sweeney
Oh my God.
video
Yeah,
up?
we blew this. We could have shown Sydney Sweeney. We could have shown these ugly Crocs. We could have let Matt just, bury himself with whatever he was going to say about Sydney.
When I show these to Matt, you know he's going to be all in.
You know she's into cars, so she designed her own Mustang, she designed her own Bronco. I actually know about her because Jim Farley told me about her from Ford.
All right, to be continued, guys. Okay, I'm just going to say. All right, I'm going to take off a couple of days again. So.
I love these.
I know, right, Alex?
Yeah, I don't know. I'm into it. What can I say?
All right, on that note, that is a wrap. I think Alex is going off to buy the shoes now.
Bye-bye.
And we know Scarlett and Romain are going to continue, and then Matt and I are going to continue on this end. All right, guys, we'll see you again for our simulcast.
All right, our coverage continues right here on Bloomberg Television. Stick with us. Quite a few earnings crossing the wire, including out of Intuit. We're going to talk to the software analyst over at RBC Capital Markets about what we just learned. That's coming up next. This is The Close on Bloomberg.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romain Bostic. Scarlett, it was not a good day for stocks here. We talk about an S&P 500 that yesterday we were all talking about the potential for it to reclaim its record high. It was just about 1% away from that, but it faded big time today. Down 1% here on the day. You saw similar moves on the Russell. The NASDAQ, though, really took it hard. Down almost 2% here on the day, and that was largely because of what we saw in the Philadelphia Semiconductor Index, a 3.5% drop for that index. Yields did drift a little bit higher here on the day, and gold pairing some of the gains that it had made on the week here. But now a lot of questions here, Scarlett, not so much about tech, not so much about what's going on here with gold and that, but really about the macro story. And of course, as always, the consumer.
The consumer and how much they're spending, or perhaps spending less when it comes to those discretionary items. And so as a result, you see Williams-Sonoma down 9% on the day, closing at a 4-month low. This is the home furnishings and home goods retailer. It said same-store sales fell more than expected, and it cut its full-year revenue forecast. So we also see that playing into Wayfair's decline today, off by almost 5%. This is a smaller competitor, certainly, but a competitor nonetheless. Earlier this month, Wayfair had reported a miss for the second quarter and also said that it expects that weakness it saw to extend into this current quarter. On the flip side, another consumer-facing name is Peloton, up 35% on the day. That is the biggest gain ever, on signs that the fitness company's turnaround efforts are starting to pay off. So a lot of cost cuts really making their way into the numbers. At the same time, Peloton managed to eke out a sales growth in the second quarter. We're talking about a 1% gain, but a 1% gain nonetheless. And in doing so, beating out analyst estimates.
Well, let's stay in the consumer space here, Scarlett. Some breaking news here on Cava. Their earnings just crossing the wire here. This is the fast casual chain, and the numbers, let's just say it, are phenomenal. Restaurant comp sales, 14.4% here. That's double what the street was looking for. Revenue was up 35% in the quarter to $233.5 million. The street was only looking for 219. Adjusted EBITDA up 59% to $34.3 million here. A company here that's basically swinging for the fences. The shares higher here by about 5% in after hours trading right now. And we should point out that the forecast for the year, Scarlett, also looking strong, 8.5% to 9% comp sales growth. Its previous forecast was for 4.5% to 6.5%. The street was looking for just 6%. So this is basically a beat all across the board. I know we have the Cava CEO scheduled to be on the big program tomorrow afternoon.
Absolutely. I think it's really interesting how these fast casual chains are in a position to really absorb some of the diners who are kind of fed up with higher prices at fast food chains. If fast food chains are raising their prices a lot and these quick fast casual chains hold on to their prices, then people will just trade up and get better food, like a Cava bowl, as opposed to getting, I don't know, a burger or chicken nuggets.
Yeah, and you see the reaction there in the shares. We're going to dive a little bit deeper into those earnings, but we do want to turn back to those earnings that we just got out of Intuit here. Those shares also higher here in the after hours trade. The company providing an adjusted EPS forecast that actually missed estimates, though some of the metrics that they had in the most recent quarter did satisfy street estimates. Rishi Jaluria joining us right now, Managing Director of Software at RBC Capital Markets. This was kind of a mixed bag. I mean, the forecast looks a little bit light, but the numbers themselves, Rishi, on the surface, I mean, to me, and my sort of untrained eye, looked pretty good. What did you make of them?
Look, I think overall this was a pretty good quarter. And again, thanks so much for having me. We saw upside on both Credit Karma and most importantly on small business. On the revenue guide for the full year, it was kind of in line with my own expectations, which is small business was going to be slightly ahead, buoyed by kind of a stable macro environment and some benefit from the price increase. TurboTax was a little bit light. Credit Karma relatively in line. Margins overall for FY25 were actually a tiny bit ahead of where the street was. EPS on a non-GAAP basis, a little bit ahead as well. So I would say overall, especially in line of some of the cautions out there, given the macro environment and concerns around tax, overall, I would say a pretty good quarter. Not surprised to see the stock up a few points right now in the aftermarket.
One thing that's interesting about Intuit is that nearly all of its revenue is made in the U.S. Is that a source of strength or is it a source of concern?
Look, I think it's a source of opportunity. I know it's not either of those, but I would say, tax is very unique in the U.S. and Canada, in terms of how it's done. In other countries, obviously done very differently. And that was the whole thesis behind them buying MailChimp to kind of diversify that business and get a big international business. I mean, MailChimp has a lot of international exposure. So that can be their foothold to get more, into the small business and maybe cross-sell QuickBooks. So they are looking to diversify away from the U.S. and broaden their international footprint. So I do think it is an opportunity for them. I don't want to paint it as a weakness. I just think tax itself happens to be unique in terms of how it's done in the U.S. And that's why I think small business, the big opportunity is outside of the U.S.
What do you make, Rishi, so far of their progress in switching to this more subscription type of model rather than the one-offs here? Is that something that you think can work for Intuit in the same way that it worked for other software companies, particularly like Adobe?
I think absolutely. It still is going to be lumpy in terms of the tax season. But overall, I think the mix, the shift to a subscription and really a cloud-based model has been pretty successful overall. We've seen that in some of the retention metrics. We've seen that in the cloud mix. And absolutely, I think we can see higher LTV, higher retention rates over time, because not only do you have more predictable revenue, but you also have better kind of cloud optimized products. And then I think there's an entire story on top of this around what what Gen AI can enable, right? Now that you have cloud infrastructure, that makes layering on Gen AI super helpful. And look, our thesis has been services heavy industries, including, tax and accounting, are very much ripe for disruption from generative AI. And we think Intuit, especially given their big foothold, their big customer base, and their domain expertise, can be a major and candidly underappreciated beneficiary of generative AI that is not being reflected in the stock price today.
I guess the big question for all of these companies is that when it comes down to it, we have a slower economic backdrop that we're contending with here. And we know that in those instances, companies cut down on spending as much as they can to the essentials. Are Intuit's software offerings essential software spending for their clients?
I think the core QuickBooks and TurboTax absolutely are, right? Individuals still need to pay for their taxes every year, whether we like it or not. And then on the QuickBooks side, right, small businesses still have to do their accounting. And if anything, maybe in a recessionary environment, they can't have full-time people and need software to automate it or maybe outsource it to some of Intuit's experts. So I think those should be a lot more kind of mission critical and a lot more defensive. Maybe there's fewer small businesses forming in a kind of softer macro environment. I'll give you that. I would say Credit Karma, absolutely macro sensitive, and Intuit will tell you as much. MailChimp, I would say similarly. I cover a lot of marketing automation software companies, and that stuff is a little bit more macro sensitive. But I would say the core QuickBooks and TurboTax should be more resilient than people are giving them credit for.
All right, thank you so much. Rishi Jaluria is managing director at RBC Capital Markets with his instant analysis of Intuit's results. Intuit shares moving higher in after-hours trading. Now, another company that we're monitoring is Ross. The shares are up by almost 6% in after-hours trading after the discount retailer boosted its full-year earnings per share forecast and reported a second quarter EPS that beat analyst estimates by a dime. Bloomberg's Mary Ross Gilbert joins us now. So, Mary, this is kind of a similar story to what we saw with TJX. You know, these discount retailers that offer consumers value are really being appreciated in the current environment right now. What is Ross doing to take advantage of its moment here?
Yeah, so Scarlett, that's exactly what's happening. The consumer is choosing value, and with Ross, they're finding the brands they want, and that means free people. In fact, Urban Outfitters yesterday reported after the close, and while their sales were very good, they were up over 6% on a comp basis at Free People, that it was less than expected, and that means they have excess inventories, and guess where it's turning up, and we're seeing it at Ross stores. We're also seeing Reebok. So those brands are a draw, and you can watch these YouTube influencers who are scouring Ross Dress for Less and saying, hey, this is what I'm finding here. So that creates a lot of buzz, too, and they're drawing in younger consumers.
Yeah.
Now, what they're also doing is making sure, Romaine, that they have those sharper price points. So they've lowered the prices a little bit more, which is why the merchandise margin went down, but overall margins went up because they had benefits in distribution costs, for example.
Well, that's what I'm curious about, too. When we talk about the price point, I mean, they were already sort of, I thought, and correct me if I'm wrong, already sort of priced at a more affordable option, or at least sort of in that sort of budget area here. So how much room did they really have to move on price without sacrificing margin?
Yes, so that's a good question, Romaine. They haven't spoken specifically on their earnings calls how much they're discounting it, but they want to make sure that it's discounted a little bit more than normal because they want the consumer to see that value so crisply. And what it's doing is it's drawing in this trade-down consumer who normally shops the specialty stores and the department stores. So they're like the higher middle-income consumer, and they're drawing that customer in, and that's helping to lift their comp sales, which is why they came in at 4% comp sales for the second quarter. Of course, the company did raise their full-year guidance. They're now expecting 6 to 6.13 a share. Previously, they were in the 5s on the EPS line. They're sticking with the 2 to 3% comp sales growth, though, just to be conservative.
Yeah. And of course, we'll see how it all shakes out for this summer and later this year. But a good start here to the second half. Mary Ross Gilbert, thank you so much for joining us. Bloomberg Intelligence is Mary Ross Gilbert. Now, coming up, we've got the top three where we focus in on some movers and shakers with billions of dollars at hand at the center of the day's big stories. This is The Close. time now for the top three, where we name drop the people driving some of the day's most talked about stories. And first up is Ken Griffin, the hedge fund founder, among a group of billionaires opening up their Hamptons homes to their peers as part of a Milken Institute event. It's called the Hamptons Dialogues, and it's a boutique version of the annual Milken Conference in Beverly Hills. You've got Griffin, you've got Bill Ackman, his fellow hedge fund billionaire, and David Koch's widow, Julia Koch, hosting panels and thinking big thoughts.
Yeah, obviously these are some of the richest and obviously some of the most powerful people as a result of their riches. So the fact that they're getting together to confab about things, sure, why not? Were you invited?
No, I wasn't. My invitation must have gotten lost.
Yeah, absolutely. All right, you know what? I'm keeping an eye on the Winklevi.
The Winklevoss twins?
Remember Tyler and Cameron Winklevoss? Of course, these are the twins. Of course, kind of lampooned in the social, what was it? The Social Network movie, of course, for their allegations of whether they maybe
had their ideas
taken. Let's just put it that way. Anyway, they just won a lawsuit. Apparently, this was basically a 5-year lawsuit with one of their business partners. They had a partnership to make an adult magazine, which I never knew. They had some falling out. The judge claimed, and I'm just going to be careful about this, that particular person tried to sort of blackmail them with certain things. This was a 5-year-long legal fight that's now come to an end. The Winklevi basically are going to get roughly about $165,000 in this, plus another $1.25 million in legal fees.
They're already billionaires, right?
Yeah, so this is chump change.
Okay.
Yeah, so.
And is it me, or are they in a lot of legal disputes?
Yes.
Feels like it. All right. Third on the docket is Mark Schneider. He's the CEO of Nestle, but not anymore, because he is stepping down from the food company after almost 8 years in the helm. And it sounds like, Romaine, he was pushed out because obviously Nestle dealing with a lot of issues, some of it homegrown, some of it macro, like just U.S. consumers shying away from brand name products because of inflation.
Yeah, and these are always, of course, journalists, we love these kind of stories because everyone was looking at his schedule, and he had all these things on his schedule over the next few weeks, and everyone said, okay, well, you don't leave abruptly when you have all that if you knew you were going to be doing all this. So obviously, something's afoot behind the scenes there in the wonderful world of Nestle. All right, those are our top three here of the day. When we come back, we're going to do our walk down memory lane here. Take a look back in history and take a look back at Hurricane Andrew, one of the costliest natural disasters in U.S. history, and some of the lessons that were learned from it. That's coming up next. This is The Close on Bloomberg. All right, let's take a look back in history. On this day, August 22nd, 1992, Hurricane Andrew took shape off the coast of the Bahamas before making its way over the next 3 days to South Florida and southern Louisiana. It killed dozens of people, destroyed hundreds of thousands of homes, and left behind roughly $30 billion in damages. On an inflation-adjusted basis, those losses were actually closer to $60 billion, numbers that wouldn't be surpassed until 13 years later when Hurricane Katrina pummeled the U.S. Gulf Coast with more than $200 billion in losses. Now, at the time, Andrew was just one of only 4 hurricanes since 1900 to make landfall in the U.S. as a Category 5, and it was the first to do so in about a quarter century. It was also a major turning point in how climate scientists, insurers, and homeowners assess the threat from tropical storms. It fundamentally reshaped the construction and insurance industries in Florida, a state that eventually imposed one of the toughest building codes in the nation, while at the same time failed to stem a mass exodus of insurance companies wary of writing new policies in storm-battered coastal regions. That's the legacy of Andrew, and both of those legacies are front and center today as we near the halfway point of the Atlantic hurricane season that runs from June 1st through November 30th. Conditions across the Atlantic for now are calm, we should say. But the mid-season hurricane outlook that was updated just a couple of weeks ago, it shows U.S. forecasters expect 17 to 24 named storms in the Atlantic basin this season alone, including 4 to 7 major hurricanes. Typically, we get about 14 named storms and only 3 major hurricanes each year. Scarlett?
Something definitely to remember here as we are in the middle of hurricane season. Let's circle back now to one of the top stories this afternoon, and that is corporate earnings. Shares of Cava up by more than 5% following its latest results, its second quarter results that beat analyst estimates. We want to bring in Bloomberg's Daniela Sirtori to join us now. And Daniela, it feels like Cava is kind of in this sweet spot where consumers are craving value, and Cava is able to deliver on that at a price point that's somewhat higher than fast food, but at a higher quality level.
That's precisely it. You know, consumers are looking for value for whatever is a good deal. And we have seen this with multiple companies that they are still willing to spend if it feels like they're getting a good bang for their buck. And what we've seen is that, you know, the prices of fast food in general have risen. And so the gap between, you know, getting, for example, a burger at McDonald's in a combo and getting Cava has become so much smaller that people are like, well, I might as well spend a couple more bucks and get a salad at Sweetgreen or a bowl of Cava or a burrito at Chipotle.
So what's like when we talk about kind of the value proposition here, Cava is still, I mean, I understand that it's something for a lot of people still sort of fresh and new, but there is a lot of competition in this space here. I mean, what they make, these bowls, these wraps, I mean, there are a zillion, at least if you're in New York City, there are a zillion places you can get the same thing. What differentiates them?
So they talk about, you know, sort of the Mediterranean, vibe that they bring, which, you know, we do have established players like Chipotle that are more in like the Mexican side. So they kind of lean into this idea of the flavors. At the same time, we do have to remember, like with Cava, that they're still pretty small. So we usually focus on how the restaurants that have been open for, more than a year are doing, but they're also opening a lot of new locations. You know, Cava only has about 340 restaurants in the U.S. That's not very much compared to a Chipotle that has around, 3,000 total. And so they still have a lot of room for growth. And so that's one of the things that also investors are looking at. You know, they're not saturated like other brands might be.
They're not saturated, and they're looking to really build out their presence. What do we know so far about their expansion plans, especially as we get into an environment where the consumer is going to be even more pressured?
I know, and that's one of the things that's been really surprising. Like, for example, Cava today actually raised the guidance for how many restaurants they're going to be building, and they actually opened recently here in Chicago, and apparently that open has gone really well. I mean, that restaurant is packed all the time. I know because I walk by it, and I've actually had to wait a long time to eat there. But, they've also said that the way that they think about it is that when they come into a market, they want to open 3 to 4 restaurants because of awareness. It helps, if people know that the restaurant is there, and it also, so there's one near them and the one restaurant is not saturated. So, bottom line, they are still opening restaurants. They are opening more than they expected this year, and it seems like their launches so far are going pretty well.
All right, Daniela Sirtori out there in Chicago. A closer look at Cava. The share is higher here in after hours trading on what, at least on the surface level, seems to be a phenomenal quarter. We're going to have a chance to get some more details as to actually what went on. A conversation with Brett Schulman, the CEO of Cava, right here on the big program tomorrow, right here on Bloomberg. And as we talk about folks trying to make decisions here about what to eat and what not to eat here, Walmart, not Costco. Sorry, you're the Costco Diamond Platinum member, so I have those on my brain. But sorry, Walmart has Walmart Plus. But what they're adding to is now you get discounts at Burger King through this membership program.
Yeah, 25% off digital orders, and there's a natural overlap between Burger King customers and Walmart Plus customers. So this is something that they looked into.
There is?
Yeah, the Walmart Plus, number crunchers have figured this out, and they're like, this is something that our members would really appreciate. And so they're rolling that out in addition to the free shipping when you purchase things from Walmart, and also free access to Paramount Plus, the streaming company.
Okay. But the thing I thought was interesting about this in the reporting was just this idea, too, that the Walmart Plus, the uptake hasn't been as great. And so the idea is that offering these other things here maybe gets a little bit more traction.
Yeah, absolutely.
Yeah.
They need to continue to build out that membership growth. All right, let's take a look at how markets closed on the day.
What do you get at Costco? Do you get like free McDonald's or something?
No, you get like $1.50 hot dogs.
Yeah.
That's really cheap, Romaine.
It's a hot dog, though.
It's $1.50.
Okay.
I mean, that price hasn't changed. Anyway, let's go back to the markets right now because the price action for the S&P, the Dow, the NASDAQ has been a steady decline lower, and we closed the day off by 0.9%. We also saw yields go up as bonds sold off too. A lot of concern, trepidation, perhaps before Jay Powell's comments tomorrow morning at 10 a.m. This is the close on Bloomberg.
right, continuing our focus on the consumer and continuing on food, a shakeup in the fitness drink space. Barcode, that's the name of it. It's a plant-based fitness water that's quickly become a fan favorite among celebrities and athletes, from Halle Berry to Victor Wembanyama. I got that wrong.
You did it. No, you got it.
I get it. And a new collaboration is now hitting the market with Grammy-nominated rapper Jadakiss working with the team to create Blue Kiss, a union of blue raspberry performance water and artistry. Pleased to say that we're joined right now on set by the legendary rapper Jadakiss, as well as the founder of Barcode, Malik, who is also the former director and performance for the New York Knicks and the LA Lakers. Great to have both of you here on set. I'm going to start with you, Bar, because when I think about fitness drinks, I think this is a crowded space, man. How did you think to yourself that you could do something that would separate you from everyone else?
I felt like there was an opportunity to kind of, pull the curtain back on what athletes really consume. And the leverage was my experience in sports science, sports medicine, and nutrition. And when you think about like any artist, professional athlete, a musician, it's not the time that you see displayed when the lights are on, it's what happens behind the scenes. And a lot of that has to do with stress management, sleep recovery, and then training. And a lot of beverages aren't, made from that perspective. So I felt like if I could figure out a way to get, the vital vitamins and minerals that can support the artistry of the game and of the show, that's a competitive advantage compared to, some of the products that just has unnecessary ingredients because they're not really behind the scenes actually providing products to players at real time.
And I've seen some of your investors and, so, of course, some of the folks that are endorsing your product. But I am curious, Kiss, if you can kind of talk about like how you met Bar and sort of what brought you into the space and why you even wanted to do it.
Well, we actually met at an event. I think it was at Irving Plaza. And we just started kicking it, socializing. I'm in the health and wellness. I'm a part co-owner in Juices for Life and Juices to Heal. And his story was amazing. Everybody always seems to have these products and say they have everything good for you in them. And then you find out after consuming them for years that they filled with sugar and all this bad stuff. So for Bar to really create something that was true to his word, working with the Knicks and Melo and some of my partners, I thought it was a no-brainer to partner up with.
So Bar, let me ask you a really dumb question. What is the difference between fitness water and sports drink?
It's a great question, by the way.
Wow.
It's a great question.
That was awesome.
I think it's the amount of calories that's in a product. We're 30 calories, right? And when you think about like consumer trends, intermittent fasting, ketogenic, some of your more like extreme dietary guidelines, 30 calories or below, it like won't kick you out of a fast. So just right away, 30 calories is the threshold of what you want to consume when you're trying to lose weight without consuming too many calories at once. The other part is the sugar content. We're 2 grams of sugar. Most products have 20 grams to 30 grams, and we're sweetened with monk fruit. So just like low sugar, low calories, and then the additives of magnesium, spirulina, adaptogens, things that literally help you reduce stress that have been around for thousands of years. Most sport beverages aren't, they don't have those ingredients in their products, so that differentiates us.
And they also have a lot of caffeine, as it turns out. Gatorade is notoriously keeping you awake at night. So, Jada, when you collaborated with Bar on your drink, your flavor, what were you thinking of when you had to consider the, what he just told us about the attributes of this fitness water?
Well, I work out a few times a week in the morning, so I know what it is. I drink my coffee sometimes, all the time on my way to the gym. But I need something for the duration while I'm at the gym. And I thought, Barcode, the Blue Kiss would be perfect. Has all the stuff to keep, premium hydration, magnesium, all the stuff that you need that won't affect your body later and give you the slug, when you go down hard and fast. So, I tried it a few times. They got into my liking on the taste side of it, and I think it's out of here.
And this isn't necessarily new to you. I mean, you mentioned a little bit earlier Juices for Life, a juice bar here in the New York area.
Yes.
And I remember when you started that, and I remember hearing interviews where you kind of talked about your own transition away from, I guess, a less healthier lifestyle to something a little bit more healthier. but you're doing that in a way where you're also making money off of it. You're an investor, right?
Yeah, we try to, if you could convert one person at a time to invest in the juice, or just try juicing on the balance side. I ain't telling you to go cold turkey from your favorite ice cream or your favorite hamburgers or whatever, but
it's a
just try to get a little balance,
And you've been doing a lot of other business deals as well. I noticed you also started a new coffee company.
Yes, Kiss Cafe.
With your father and your son.
Yes, sir.
Yeah. How's that going?
Oh, it's going great. Just trying to start something different. 3 generations to partner up with my dad and my son and try to launch a brand that was owned by us and create a legacy for my son and the rest of my kids. I thought it would be brilliant. And then while doing Barcode, I'm also like a student in the game, learning about food and beverage that help Kiss Cafe as well.
So, Bar, thinking about how your drink is available, you have exclusive partnerships with 3 NBA teams. It started with the Brooklyn Nets, right?
Yep.
And that also includes the Miami Heat and San Antonio Spurs.
Correct.
And it makes sense given your partnerships with 2 well-known basketball players as well.
Yes.
Are you looking to expand to other leagues? What does that negotiation look like on your end?
I think first, my background in basketball for me is...
it makes sense.
It makes sense, right? But when you think about demographically, where these teams are positioned, these are key markets for us as a beverage company. So we kind of filter out a lot of imbalance because we're only focused primarily on the coast of the country. California, New York, New Jersey, Texas, Miami. So those teams makes a lot of sense because we have the retail support and the field marketing and sales support, boots on the ground in these areas. So when we think about sports teams and then obviously the culture of these organizations, these are iconic, legacy-driven brands. Miami Heat, several championships. Every player has played for that team. San Antonio Spurs, they have the oldest, probably most prolific coach of this time, and Greg Popovich, and it made sense for us with Victor Wembanyama to figure out how to do a team deal. So it's really strategy of demographically, does it make sense? Do we have the retail support from consumers buying it on the ground? And then do we have the field support and marketing around it to really amplify the awareness?
Is the goal to one day have someone dump a whole bottle, a whole canister?
That is the goal. I can't wait. I'm hoping it happens. I'm hoping it happens this year.
You got to dethrone Gatorade.
This is it.
To happen.
This is it. Yeah, we're waiting for that moment. That's the goal.
All right. Thank you so much for joining us today, Mubarak, Bar, Malik, and Jadakiss on the new fitness water drink Barcode.
Thank you.
All right. We have some breaking news, Romain, and I know this is something that you were talking about earlier. Canada is forcing an extension of the railway labor deals to end the lockout. They're ordering the railway dispute to the Industrial Labor Board. And this is something that, of course, has huge ramifications for the supply chain and the gumming up of the supply chain.
Yeah, we spoke with Thomas Seal a little bit earlier up there in Vancouver, and he's kind of intimated that something like this could happen. Obviously, we're talking about a huge amount of trade, more than $700 million in trade per day that's now basically shut down. All right, a lot more coming up here on the program. We're going to set you up for some of the market-moving events over the next 24 hours. This is The Close on Bloomberg.
It is the final day of the Democratic National Convention, with Kamala Harris set to headline the finale in Chicago. Courtney Gelman, Managing Director of Policy Research at Strategas, joins us now with more. Courtney, I'll get to Kamala Harris in a moment here, but what we've noticed, of course, from the days so far of this convention is that there's been this incredible celebrity lineup. Oprah yesterday, Lil Jon, Kerry Washington is set to host tonight. Does that help or hurt in terms of the Democrats trying to reach out to undecideds in swing states?
It certainly helps. You want to appear like you are winning. You want to appear like you have momentum at your back. But at the same time, you don't want to get too comfortable. And I think, aside from the headline speeches that we've been seeing, what we've heard on the ground is that there's really an emphasis from some of these Democratic leaders that people can't get too comfortable and they still have to incentivize people to come out and vote and not just take the election as a given at this point for Harris.
Yeah, and we expect Kamala Harris to say something along the lines of, we're still the underdog in this race. Is she likely to give us any new policy details that she hasn't already unveiled in her comments last week?
I wouldn't expect anything new on economic policy. I think that this speech is really going to be for her to introduce herself on a personal level to voters, which she hasn't really had an opportunity to do because the 2020 convention for her vice presidential speech was virtual. So I think it's going to be more about connecting with voters. Certainly, she's going to have to address economic concerns because that's a top issue this election cycle. But I think it's going to be more of what we've already heard from her. I think it will be interesting if she touches on some of the areas where Democrats are perceived as having a disadvantage, things like the border and immigration, which so far some of these speakers have not shied away from. That will be interesting, as well as how she tries to differentiate herself from the Biden administration, since a lot of voters do view her as tied to Biden and they are unhappy with this economy.
Well, I am curious then, kind of what happens after tomorrow. I mean, typically after these conventions, the candidates hit the campaign trail where they do start to articulate in more detail these policy positions, how they'll address the concerns of Americans here. How well do you think she's going to do out on that trail? Because we know that was a big criticism of her coming out of the last election, that she didn't necessarily have that same connection, that same empathy that maybe Biden did with people.
I do think that she's a different candidate than she was in 2020. She does seem to be a much better speaker, but that is certainly a concern. That was a concern that Democrats had in terms of replacing Biden at the top of the ticket, in terms of her ability to connect with those voters. I think that there is a hope that she can contrast herself with Trump, because this is, elections are not just looking at the one candidate. You have to compare them with the other one. And I think that there is a hope that her, as well as Vice President candidate Walz, can do a better job of connecting with the average middle class voter than Trump and Vance can. So that's something to pay attention to. But I think we'll get a really good indication in terms of some of the indicators that we're watching, most particularly favorability, if that's actually succeeding with connecting with voters.
I am curious if you have any insights here into the campaign of Donald Trump and the Republican Party here. I know they've been a little bit silent, as typically the opposing conventioneers are when you have the opposite convention going on. But once this breaks here, what do you think their sort of plan of attack should be? Is it to go after the policies of his rival, or is it more to articulate their own vibes, if you will, in a way that we've seen the Democrats do over the past couple of weeks?
Yes, it's interesting because what we saw with the Republicans convention is the kind of preview of Biden dropping out, announced during that convention. And then what we had ahead of Harris's speech today is the preview of RFK potentially endorsing Trump. So it is interesting that, well, the candidates themselves are staying quiet. The parties are certainly making some noise ahead of the other candidates' speeches at the conventions. But I think for the Republicans, it's going to be both. Mm-hmm. Certainly, in order to win this race, you have to broaden your base. And there's going to be a lot of pressure from the Republican establishment for former President Trump to try to attack Harris on things like some of her proposals in terms of grocery store price caps, things along those lines that some might view as too aggressive. He's come out with the Comrade Harris kind of talking point more recently. Yeah. So I think it's going to be both. They certainly want to keep the base. They want to keep the base energized, but you have to win independent voters to win in this election.
Courtney Gelman, Managing Director of Policy Research over at Strategas Securities. And be sure to continue to stay tuned right here to Bloomberg for our full special coverage of the Democratic National Committee convention, 8 p.m. Eastern time, right here on Bloomberg.
So the big question, Romaine, is there going to be another special guest star tonight after Oprah yesterday?
I don't know. Was Oprah a guest star?
No, because no one knew that she was coming out. You knew? Come on.
No, I didn't know, but I was like, Oprah, whatever. I don't know.
It makes sense, Oprah Chicago, but she wasn't expected.
All right, can we get a guest star under 50? How about that? All right, let's push ahead to what the markets are going to have their eye on over the next 24 hours. Of course, the special guest star tomorrow is going to come at 10 a.m. Eastern time.
Yep, and Jay Powell will be speaking from Jackson Hole, so we'll bring that to you live. And then afterwards, we've got interviews with Bostic, Harker, and Goolsbee, sitting down with Bloomberg's Michael McKee to kind of break it all down for us.
We're also going to get some more economic data, this time on new home sales, Scarlett.
Yeah, 10 a.m. Eastern time. And we know that, the drop in mortgage rates has been encouraging for home sales. So we'll see if that also applies to new home sales.
Yeah, absolutely. And then this Kroger-Albertsons acquisition, is this thing ever going to get done?
I don't know.
Apparently there's a court hearing tomorrow on the FTC's attempt to block this.
Yeah, we'll see how that shakes out. The FTC has not had the greatest record legally in courts.
And then keep an eye on the Diane Jaffee set to face Parliament tomorrow as well. Full coverage of all those stories right here on The Close. For all your politics news, stick around. Balance of Power starting at the top of the hour. And of course, be sure to keep it locked here for our special coverage of the DNC tonight, 8 p.m. Eastern Time, right here on Bloomberg.